Good evening. My name is Doc Severson. This is the TheoTrade Nightly Report for Tuesday, June 21st. I'm going to start out tonight's report by looking at the SPX index. So the SPX cash index of the S&P 500, which closed today at just shy of 2089. So just looking at the candlesticks alone and looking at the price action here, we have a nice little sort of modest move. Today was an inside day based on yesterday's price range of this. So that is just about what we would expect considering the amount of risk that we have showing up over the next couple of days. To really appreciate that, we have to go back over to the option chain and look at some of these. Now the 22 June cycle here, which expires tomorrow, so these are Wednesday options. Over here, if we look at this, this has an expected move of plus minus 14.5 points. All right, that's not really the big story though. The big story is if we go out to the Friday options here with 3 days left, we're looking at plus minus 40 points. So an 80-point potential range with a 68.2% probability. What does that map out to over on the chart? Okay, let's take Wednesday's range first of all. So again, Wednesday has plus minus 14.5 points. So that's going to put a top range on that of about 2104 or so. And the bottom target for this is about 2075. So this is about tomorrow's range that we might expect to see. So again, that's pretty significant, but still within the range of this larger range that we've been trading in between about 2050 up to 2120 on the cash S&P. Now let's contrast that versus Friday's price range, which is just 3 days out here. And again, we said this was plus minus 40 points. So we're going to be looking at a top range of about 2129 or so up here, and a lower range of about 2049. So look how large the price range is here for just the next 3 days. It's literally the entire 70-point range that we have here. In fact, we have an 80-point range, a 68.2% chance of something falling within this 80-point range that's here. So let's look at this in a greater context of what's been going on over the past year to 2 years or so. If we actually pull back to the weekly chart of the S&P, so let's go ahead and do that. Let's go to a 3-year chart of the S&P and let's plot this range against that. So again, if we go out to on the top side about 2030 or so, 2029, all right, to the top side, so that's going to be up about there. And the lower part of the range is going to be down here at about 2050. So about 2130 down to 2050 or so, which is what we might expect to see over the next few days. Could be anywhere within that range. Now, what I'd like to do is not necessarily try to trade something before that range. So the price is already baked in. That price movement's already baked into the option chain. So what I want to do is, after we do see a move, and let's say perhaps it's up to here, that's the direction that I want to fade. Let's say it's down to here. Again, that's the direction that I want to fade, is one of the extremes of this range, whether or not it goes down to 2050 or up to 2129. Remember, we have all-time highs sitting up here on the S&P at 2134.72. So a move up to that range is probably something that we can fade, as is a move to the lower part of the range, especially if we get somewhere down near here. Okay, let's look at a few important underlyings past that point. Now this is crude oil, and what we're seeing is the price kind of just trading within a channel on the daily chart. So you can see this is one big weekly swing higher, and this is a series of higher highs and higher lows on the daily chart. And all of these recent lows are starting to connect here. So what I'm looking for here is whether or not the daily chart prints either a higher high above 52 or whether it fails here and sets up a lower high, in which case we might start to see the backside of that break the channel and maybe start setting us up for the next move lower, which should print at some point in some fashion, ultimately what we want to see is a higher low set up on the monthly chart. Now this may take months for this to set up and a lot of choppy price action before it's able to retrace back to there. This will probably include something like this, a lower high setting up even on the weekly chart. So it's going to have people whipsawed in both directions for a while here until we print that very important higher low in crude oil, which will serve as kind of a launching pad for the next swing up. So that has got to be printed, otherwise crude oil is just going to end up rolling over again and gravity takes over. So it's very important what happens here in the next few weeks. Here's a chart of gold, the monthly, weekly, and daily charts of gold. Gold absolutely got hammered today, and we're starting to see a little bit of this broadening pattern showing up. So we're seeing, it's almost a megaphone here as the volatility starts to expand and really come out of here. And this is where we're seeing a lot of emotion bringing up. And when we see this instability showing up in charts, usually this ends up being a bearish pattern, which is okay because ultimately we want to see, just like in crude oil and like most commodities, frankly, we want to see the price come down at least some modest amount to kind of shake out all the weak hands recently and print that very, very important higher low, which will again serve as a launching point higher. So this needs to base for a while here before it sets up. And so again, this can sometimes be this instability here, this increase in volatility can lead to a bearish tape after a while. I will finish out today's video with the 30-year Treasury Bonds, okay, the ZB futures. And right now this thing has just been screaming up to all-time highs. And so you can say that this is a very, very unsustainable move. You can see this just in the shape that's occurring at the monthly chart. Anytime we start to see this, exponential acceleration up to nearly an infinite slope to the upside, this is always the hallmark of a market that typically at some point reaches apogee and then starts to fail very, very hard down the backside of this. So we're going to see this continue going higher and higher, perhaps until the point where the bond market and the Federal Reserve, somebody's going to blink during that game of chicken. So as always, the reversals will start from the inside out. They always start from the smallest time frame. So what we'll see before anything else happens here on the monthly chart is you'll start to see this kind of the cracks in the foundation will occur, because what will happen is a downtrend will start to be initiated at the smallest time frames. In this case, you can see this pattern of higher highs and higher lows would be broken by a lower high setting up here and then a subsequent lower low. Ultimately, the same thing has to happen with the weekly chart as well. The weekly chart will ultimately have to set up with a lower high and a lower low, and this will start the process of pulling down the monthly chart. Again, these things take a long time. Tops are a process. Bottoms are an event. No matter what time frame you're looking at, a bottom is an event, the top is a process before it finally starts to fail. So again, watch from the smallest time frames on out. The reversal will start from the inside out, and we'll let you know if we start to see it happening. And that's it for tonight's report. Have a great evening, batten down the hatches for Thursday, and we'll see you soon.